Awesome. Thank you, everybody. Thank you for joining. Thank you for watching this investor presentation for the Garden City Industrial Complex number 2. Let's get going here. So the Garden City Industrial Complex, I'm sure you've heard us talking about it. The location is absolutely phenomenal, with the location to the in regards to the port, the airports, the highway, just everything. The demand drivers in this market are absolutely phenomenal, and we couldn't be more excited about that. So tonight in this presentation, we will go over the why industrial. Why do we think industrial is a good investment? We will talk about Savannah, why that is our target market. We'll talk about Savannah Industrial specifically. Then we'll dive into a little about the specifics on this deal and why this deal is so great. We'll talk about the investment highlights, returns back to the investor, and then how do you get involved and what the timeline looks like to get into this deal. But before we go into it, we do have to put a disclaimer, just talking about how past performance of these assets does not indicate future performance and all that legal jargon in here. You can pause it and read it if you're watching the recording. So why this industrial complex, industrial storage, why we think it's a great investment is because as over the past years after COVID, post-COVID, pre-COVID, during COVID, the supply chain went through some issues with labor, with pricing, everything. The supply chain, there were constraints that created more of a demand for this product specifically. And with the uncertainties in the trade, foreign trade policies, this asset is just more in demand. And that's pretty much on a national basis, but in this market specifically, it is pretty much a hub for shipping coming into the East Coast. And with the rail system coming out of this market, with the highways, with the transportation, the logistics, everything, this market is just a phenomenal market for incoming and exporting goods into the United States and out of the country. That's what makes this product in this market so good. The industrial storage is, gets more and more in demand with construction, with logistics, with, businesses always need a place to store the goods that they're gonna be moving, and this kind of product is just high in demand. The ease of management on these products, these assets, is just it beats multifamily, because you put a lot on the tenant, so you're hedging risk that way with increasing costs in that side of the business. You do have stable businesses that occupy these properties. You sign longer term leases with automatic annual increases that make this product more desirable for your common investor. There is a limited supply of this product in in markets throughout the country, and with that limited supply, you're getting an increase in demand for the product. So, with the increase in demand, limited supply, developments become more in demand, and that newer product, you really have an edge on the different markets. The vacancy rate continues to be low. Historically, the vacancy rates have been very minimal, and these businesses just continue to occupy it. And signing the longer term leases gives you an advantage where you're able to predict where you're going to be, and you're able to forecast how your performance is going to be on the asset. There is a low retenant rate coming from low vacancy rates, so you don't have much turnover, and you have low and predictable capital expenses, which make it simple on you as the ownership team to know how these assets are going to perform throughout the different leases. So why Savannah? Savannah is it's a great market. It's very logistically located very well on the eastern coast. It is the first deep water port coming out of the Panama City Canal going north. So you have a lot of big deliveries. They can take up to the third biggest container ships today, and they're looking at different ways to take the biggest container ships, which right now the limiting factors are the depth of the Savannah River and the height of the bridge going over to South Carolina. So they're looking at raising the bridge, lowering the depth of the river so it's deeper, to adjust for taking the bigger container ships. You do have a lot of the big major demand drivers coming into that market, which is, you know, one of the biggest things that our team looks for when we are entering new markets is the demand driver. The demand drivers in this market specifically, you have the new Hyundai electric car plant, which is an $8 billion investment into the market. You have the Georgia Port Authority, which is they're expanding over 30, I believe it's a $5 billion expansion over the next 5 years, which, you know, brings considerable amount. It is the considerable amount of business. It is one of the biggest container ports in the country. I think it's ranked number 3 biggest container ports. The logistics is absolutely phenomenal with highway, with 95 going through the city or on the outskirts. You have the other, I believe it's Interstate 20 that goes east to west, and 95 which goes north to south. So, and then you have the extensive rail hub coming into Savannah, and it can reach, I believe, anywhere in the United States within 2 to 3 days, which is pretty phenomenal. You also have a pretty busy international airport, and that also is to its advantage for Savannah. The unemployment in the market is 3%, very low. The vacancy for this industrial product, that is also extremely low. I believe it's 3 to 4%. nationally for the shallow bay product, and it's even lower in this market specifically, in the 2%, under 2% range. So why the Savannah Port industrial product? Obviously, you have the Garden City Terminal, which is one of the fastest growing ports in North America, not even just the United States. So you have that. You also have rail access with CSX, Norfolk Southern Railroad, which provides class 1 service going right into the Garden City terminal. You have the interstate access, and you can access over 44% of the US consumers and manufacturers. So you have a lot of, it's a very busy port with containers and bringing goods in and out. It is also, you can see in the upper right, it's one of the, it is the most logistical friendly city in the nation. You go into the market and you just see, you on the highways, you see the containers just going in and out of the port all day long. Which is a great thing to see when you're in this business. So a little about this investment specifically. The acquisition is we would be acquiring a 2007 build operating asset, 100% occupied. And this is within 2 miles of one of the busiest gates in the port, gate number 5. Within 2 miles. That's close. That's extremely close. It is probably the closest product to the port, which is, you can't beat it. The investment also includes 2 vacant lots that are about 1 acre per lot. So two vacant lots, 1 acre per lot, and an operating asset that is cash flowing day one. Brings in about $15,000 a month on that 12,000 square foot asset. The additional 2 lots, we're going through engineering drawings to get it approved for 2 21,000 square foot developments. So we're bringing this asset from a 12,000 square foot operating asset to 54,000 square feet total, 2 miles outside the port. And we're looking to have this leased up before the building's even built. So it's the investment is phenomenal. Current ownership is achieving 4% annual increases on that operating asset today. And the average rent that they're renting that operating asset out at is about $16 a foot. And that's what we underwrote the new asset at. So conservative underwriting, we're underwriting at current rents, and we're projecting that we're projecting that we'll be at about 75% occupancy in year 2. Year 1, we're at 100% occupancy with the operating asset bringing in $15,000 a month. Year 2, we're at about 75% occupancy on that, on the development asset. So we're putting in our underwriting that it is going to take 1 year to go through zoning, permitting, and building, and we're allowing about 6 months of time after construction to lease up and get to about 75% occupancy. And then we underwrote to have 25, 20, about, these are rough numbers, 25, 20, and occupancy gets down to like, or vacancy gets down to about 8 to 10%. So very, very conservative. We are figuring 4% annual increases at the property, which is what they're getting now. And you can't beat this location. We'll have a map in a couple slides. The investment summary, we are, the total acquisition and development is about $9 million. Give or take. Equity raise is $3 million. We're hoping to come under that. The debt that we're getting is estimated at 70% loan to value. We are getting the debt fixed at 7.5% for 5 years. Obviously with a refi sooner rather than later. The expense is minimal. We're carrying $1,250 a month, which is about $16,000 annually. The average market rent, which we were talking about, currently they're at about $15 a foot. The market rent is about $16 a foot for this product, and we think we'll easily be able to achieve that on brand new product, because they're getting that in a 2007 build. Post development, we're looking at having an annualized income of over $800,000, which is we're going from under $200,000 to $800,000 post development, and we'll be significantly increasing the value of this property. We're looking in the $12 to $14 million range valuation based on acquisition cap rate. So what does that mean for you in returns? We're looking at $100,000 investment will yield over $230,000 at an exit. That's what we're looking at. We're projecting that to be over 5 years. We'd be looking to have that back to the investor before year 5, probably in the year 3 to 4 range. What do the returns look like? Obviously, there's cash flow. Cash on cash return is about 5 in year 2, 5 in year 3, close to 7 and close to 8 in year 4 and 5. As you can see, that's how we get to about $130,000 in addition to your original $100,000 over the life of this deal, based on a 5-year exit. So why Garden City Industrial? This location is unbeatable. You cannot beat this location. Strategically located near just outside Port of Wentworth, which is Garden City Port, as well as Savannah Airport, as well as the Interstate 95 located nearby, in the city of Savannah being local as well. You can't beat this location. You're stepping into a cash flowing property with 100% occupancy with long-term tenants at 5134 Augusta Road. That's an operating asset. Great tenants, great tenant base. These are the people that stay busy no matter what. The value add potential is in those neighboring 2 lots. You're acquiring 2 additional lots, 2 additional acres where you're able to develop. We're looking at 21,000 square feet per acre, which is, it's a no-brainer to develop that in this location, right outside the port, right near the airport, right near the city, right near the highways. Logistically, you can't beat this location. These assets historically are a low cost of operation. You have triple net leases where the tenant assumes most responsibilities, and utility costs as well. So, rent analysis of the existing asset, $16 a square foot, which is what we're budgeting on the development, which is conservative. Um, the operators in this deal, you have Trevor and Shannon. I think Trevor's on this call. Trevor, if you want to come up and say something.
Sure, thanks, John. Yeah, my name's Trevor. My wife Shannon, she's not here with me right now, but we joined John's team a couple years ago now, and this will be our fourth asset. We're closing with him. All the others are very successful. We've been about 17 years in the real estate investing business, whether residential, multifamily, and now we've moved kind of into the industrial as well as doing the other stuff. But industrial is where we're focusing. That's the asset class we like best. Um, yeah, that's about us.
Let's go. Thanks, Trevor. I'm John Zanotti. I'm a full-time operator of these industrial assets. We operate a portfolio of about $50 million throughout the country, with a handful of these industrial multi-tenant shallow bay assets. This asset class performs better than none. It's one of my favorite asset classes. This market, we already own two other assets performing great within 8 miles of this asset, and those are performing phenomenally. So, the proof is in the pudding on this asset class, and these assets perform incredible. That's why I love these assets so much. I have a little over 10 years of investing experience. I have about 5 years with these assets. My background is in construction management, so we built these buildings and now we're owning and operating. And on this deal, we'll be building it as well. Lev, are you available to talk real quick?
Yeah, absolutely. Yeah, I would just say for me, what's exciting about this asset class is, I think a lot better tenant base. Obviously, this location as well is phenomenal. Everything you've already talked about, the ports, where it's at, the strong demand for it. But I have about 5 years of real estate investing experience. I guess I've officially probably worked with you, John, for probably about 4 years. And so I, for one, enjoy working with you, but coming from multifamily to industrial, I would say that just the dealing with the tenant base of industrial buildings versus dealing with apartment and regular tenants, it's definitely a stronger asset class as well. So that's what I enjoy about it. And I think the team, that everybody here is it's great working with you guys. And I think, a lot of strong strengths as well. So love the property, love that, you already have assets in the area. And I think over the years, we're going to have an extremely strong market. So looking forward to all that.
Thanks, Lev. Danny, are you in a position to talk real quick? Well, Danny has been a partner in these deals. He's in a couple of the other deals in Garden City. And he's a contractor by trade, has been operating these assets for 4 years in a national portfolio of these industrial deals. And it's been great working with Danny, and he's been at this property a couple times, has seen it, walked it, toured it, saw the location. So it's great to have Danny on the team for this one as well. So timeline, it is a quick timeline. We opened this opportunity the beginning of March. We're looking to have funds on the move to get into the deal by March 24th, which is a week. We are about 50% committed on this deal. We just opened the bank account, so we're gonna be getting funds moved over the next week or so. We'd love for you to get your spot held for you, get into the portal, and get your funds on the move. We are looking to close this deal on March 25th, about 11 days away. So looking forward to it, and get yourself a piece of that Savannah dirt. So let's make some money in Savannah. Thank you everyone for joining. A quick picture over here, 5134. You can see the pin right there. 307 is the gate in the report. You can't beat that location. You're extremely close, and yeah, and look at how big that port is. All the containers, the cranes, everything. So thank you again for joining us, and we wish success and good fortune for this deal, and we hope you join us. So thank you very much. Now we'll open it for a Q&A, and if you just want to take yourself off mute and ask away. Or put it in the chat. Thank you, Dave. Any takers want to ask questions? Well, I'm gonna shut the recording off. Thank you again for watching. We hope you join us on this one.